Bloomberg Quint.
Well, L&T Technology reported a strong set of numbers in the fourth quarter of financial year 2019. Now, moreover, the company is expecting its FY20 revenues to grow nearly 14 to 16%. To give us more details on the quarter gone by and on the future outlook of the company, joining us now is the CFO of the company, P. Ramakrishnan. So, sir, to start off with, what aided the 18% dollar revenue growth in the fourth quarter and the 300 basis points margin expansion that we have seen in the fourth quarter of financial year 2019?
Okay, just to give a high-level perspective, let me just summarize our performance for the company at a yearly level. As you may have seen the numbers, we closed the revenues at 5,000 odd plus crores for the year FY19 and equivalent to roughly around 720 plus odd $million, almost demonstrating a 26% growth over the previous year in constant currency. And coming to Q4, the revenue growth, we posted at $191.3 million, which also exhibited around 3% Q-on-Q growth. Since we are catering to pure play engineering R&D services and considering the fact that we have a presence across 5 major verticals is one of the, I would say, major parameters for justifying this growth upturn which we did for FY19.
Okay. Also for FY20, if you see, you're expecting the dollar revenues to grow nearly 14 to 16%, and this is despite the fact that there are some client-specific headwinds for you. So what is that will lead to such a strong revenue growth in FY20?
In fact, when we talk about the client-specific headwind, there is only one client which we talked about while we released our Q3 numbers, that this has an impact of almost 4% kind of growth, revenue growth impact. When we gave this guidance of 14 to 16% for FY20, the fact of this particular client, client 4% degrowth has been factored into this 14 to 16% guidance.
Okay. Also, EBITDA margins at around 18%. Is that sustainable for financial year 2020? Any challenges that you see for this number?
FY19 EBITDA margin was at 18% as compared to 15.5 for FY18. The margin levers for us, the margin improvement for FY19 at almost 2.5% was partly attributed to a balanced revenue mix coming across all the 5 segments, weaker rupee, and also operational efficiency. Going into FY20, one major important parameter which will determine the course of EBITDA margin would be the exchange rate, one. Secondly is, as we talked about, revenue mix. Now, if you see our EBITDA margins across the 5 segments we have, there are 3 segments which today in FY19 contributed to 40% aggregate of our revenues. The EBITDA margins is higher of 20 odd %, and the other 2 segments in aggregating to 60% revenue, their EBITDA margin profile is in mid-teens. Now, the revenue mix will determine the margin threshold into FY20 as well. Having said that, we also have some levers to improve the margins from what it is today, but a major part, I would say, would be attributed to revenue mix and dollar-rupee exchange rate.
Okay. And how's the client spending when it comes to autonomous vehicles, security and electrification segments? And what are the updates on the deals in the transportation verticals?
In fact, in transportation, we cater to 3 subsegments called automotive, then we have truck and off-highway, and then we have aerospace. Now, in automotive, there has been a definite transition in terms of what the global, automotive majors and their tier 1 suppliers were, investing in engineering R&D. The thing has been more on, investments in autonomous car driving, then battery for electric vehicles, the battery storage devices, and advanced passenger assist and safety systems. So a lot of spend is happening in these 3 areas, And LTTS over the years has built up competency in these 4 or 5 major areas in automotive. And given the fact that we are almost dealing with some of the leading OEMs and the tier 1 vendors for in this particular segment, and we expect that the kind of spend on this sector will continue, and we should be in a position to take more of such opportunities.
Lastly, sir, what is your outlook when it comes to the industrial products verticals, and what is the on-ground traction for this segment?
In fact, industrial product segment again is one of the, I would say, a very important segment for us, and we do a lot of work relating to pure engineering across many sub verticals, which is more on the electricals and electronics area. We work with many clients on new product development, including value engineering, and also we bring a lot of innovation. This is our key plus points in this particular segment. For FY19, the industrial products also demonstrated a double-digit growth, and we expect, considering the kind of client traction we have and the competency we have, we believe that we will be in a better position to grab many of these opportunities, and the growth upturn in industrial product should hopefully continue in FY20 as well.
Well, that would be all, sir. Thank you.
Besides electrical and electronics in industrial product, there is a lot of work which happens on Factory 4.0, and it is these kind of opportunities which should hopefully kickstart into some sort of a robust growth forecast for this particular segment as well.
Well, that would be all, sir. Thank you for speaking to Bloomberg Quint.
Thank you.